If you could guarantee your or your child's or your grandchild's insurability, would you want to? I thought so. That's why we're going to talk about it. Hello and welcome to the Durham Talents channel. My name is Jesse Durham. I teach people how to live and leave a lasting legacy with infinite banking. Today in our EncycloMedia series, we're going to cover the guaranteed insurability option rider that you can attach to a policy for the purpose of implementing infinite banking. But again, at face value, hope you appreciate that pun, it has its own merits. But here we're talking about it in the context of implementing infinite banking and how that could be a good, helpful boon to your bankability. Now, let me preface by saying, for those of you that are procuring policies for yourself to implement infinite banking, every company is going to be different. Every contract, every product is going to be different. So I want to speak at large of what the possibilities are. These are the types of things that I wish I would have known about and that I would have had on my own policies, that knowing better now, I can do better for myself and for clients. This rider, of course, then, first and foremost, is something that you can, when you see the value to it and you want to add that to a policy that you are applying for, it will cost premium. So as always, the consumer pays for everything. If this is a particular value that you want added as a rider to your convertible term policy or your whole life policy for the purpose of implementing infinite banking, then it's going to take premium. Premium is what is going to buy that for you. What it does is allows you to guarantee, meaning you will not be subject to health insurability issues in the future. No, you're guaranteeing it now at the time of the purchase of a current policy. You're guaranteeing that at some point in the future, and that'll be specified, some point in the future, regardless of any health changes, employment changes, etc., you're going to have the contractual right to expand the insurability that you have contractually available to you, which means more death benefit. It can mean more cash value. Then, of course, it can mean more bankability by adding to an existing policy. Potty? I said potty. I don't know if I've ever had a blooper where I said the word potty, but there you go. You can possibly add to the current policy, or it may create a separate policy. So let me give you a numerical example. If you're paying for a particular rider, such as this guaranteed insurability, every month or every year, however often your motive premium is set up, it's guaranteeing you the opportunity in the future to be able to add, let's say, $20,000 or $100,000. These are real figures that I have seen from companies and that I use with clients and will use for myself. More on that in a moment. But you could add $20,000, $100,000 in death benefit at a time of your choosing or that's in your contract by having this rider. So you're paying for the rider in the meantime, and when the opportunity arises, you can capitalize on that by converting that to a new policy. That rider can create a new policy of an additional $20,000 or $100,000 in death benefit, let's say, for you. So with this rider, you would be able to increase your life insurance amount without providing any proofs of health or insurability. So it's really helping you plan now for anticipated growth, change of goals, expansion, more income, life events in the future. So some policy contracts will actually tell you that on these particular dates or ages or life events, and I'll give you some examples, the policy may say something like at age 22, 25, 31, 34, 37, 43, 46, or it could be life events such as when you get married, you adopt a child, have a child, you get a mortgage. So every, again, policy could be different, company could be different, but there can be life events and there can be specific ages where you have an opportunity. Okay, I can, instead of just paying this month's premium to have that rider, I can actually now convert that $20,000 or $100,000 that is available to me in new insurance, new death benefit, into that. So that would mean a change in your premiums, of course, because you will be, in a lot of situations, creating a new policy for a new $100,000. So you will pay an according premium to that. And again, all the details, all the nuances are important to know. But that is such a boon financially to just know that at a young, let's say you were 20 years old and you had these 6, 7, 8 different opportunities in life to expand another 20,000 or another 100,000, another 100,000. That's a great growth to your net worth, to your protection, just at a surface level, at a face value level, like I like to joke and say. But for those of us that are implementing infinite banking, that means that as your trajectory of what is theoretically expected of increased income, increased needs for protection, all of that, as all of that increases as you get married or get a home, grow a family, pursue a career and earn more income, that is giving you more of a financial footprint to be able to warehouse that wealth. It gives you a guaranteed contractual right to be able to pay more premium, create more cash value, create more death benefit, earn more dividends for yourself, and do more infinite banking. Now, there's something to be said then about if you're creating a new policy because of this policy rider, this guaranteed insurability rider, that new policy may be subject, if you want to add other riders at that point in time, to underwriting, which is good to know, and it may behoove you to be able to do that. But in the event, and heaven forbid, but in the event you have, again, let's take that 20-year-old who has all these several options in the future to add to their system. If, heaven forbid, something does occur health-wise that would perhaps make someone uninsurable, with this already being in place, that person would still be able to advance their infinite banking priorities even with that change of circumstances, which is, in my opinion, a very golden opportunity. And again, the kind that I wish that the policy that I had about a decade ago, my first policy, have had this option. And even the policies that we have on our children, that we got on our children, we did not have this awareness of whole life insurance and its versatility. And we always knew that it was a robust asset in and of itself, but the variations of riders that are available make it even more bankable. And we, with the expectation of our 4th child this year, 2025 at the time of this recording, right after Thanksgiving, I'll be looking to get that next policy, and this is an option that we will be adding to that policy that we just didn't even know about on getting prior policies for ourselves and our children. So just to be an open book with you and transparent about, this is one of the things that I wish I would have known about. We're doing something about it for ourselves and for our clients. So this rider obviously wouldn't make sense for somebody or even be eligible for somebody at certain ages. The rider details may tell you this rider is only available from this age to this age. So you need to be aware of that at the time of application. That's why I'm putting this information out there. I'm trying to share my absolute best practices of things that we're doing and helping clients with so that you know sooner and can do better. So the premium amount for this rider will be determined for you at the time of application, should you choose to apply for this rider. And again, I can't say enough about if you could get this rider on a policy for a child. You can have policies on children as soon as 2 weeks of age. We just need that Social Security number and those personal information markers, of course, to be able to begin a case for an individual. It's such a boon with the future being so unknown to get as much insurability acquired for yourself or someone that you love as soon as possible. And on that note, if you've not seen me talk about convertible term insurance, that particular video and information is on this series, the EncycloMedia series. I'm describing how I myself, and I would encourage you to consider, have bought term insurance, convertible term insurance for the purpose of infinite banking in the future, but that got me a whole lot more protection now at 40 years old with my fourth child on the way. It's something that I implemented. I would encourage you to check that video out if you haven't, because that's a great way for us adults. Children can't get convertible term insurance. They have to have whole life insurance exclusively. I have both. I have properly structured whole life insurance policies for mutual companies that pay dividends for the purpose of implementing infinite banking, but I also have convertible term insurance to go ahead and acquire now for myself. Every bit of what is currently available to me, I'm insured to the max as of today at this time. That is a moving target, but I've done it for myself. I would encourage you to consider the same move when it's appropriate for you. But for the minors, this guaranteed insurability option rider on their policies really guarantees a lot of expansion in the future, come what may. Now, again, this means that you need to be proactive. You need to be familiar with your policies, your contracts, or ones that you're considering getting. You need to be having intentional, meaningful conversations with your agent or advisor. If you are my client and we've not yet had a discussion about this topic of the guaranteed insurability option rider or the convertible term insurance that will allow you to acquire more or even all of that financial footprint that is available to you, then let's have that conversation. You can find me at durhamtalents.com. My hope is that you do live and leave a lasting legacy. If this video has been helpful to you, make sure to give it a big thumbs up. Share it with a friend who's doing infinite banking with you. And I hope you have a great day. Take care. This rider is an option, first and foremost, of course, that you can, without providing any proofs. The policy may say something like as soon as possible about by adding to an existing policy. I said potty. I don't know if I've ever had a blooper where I said the word potty, but there you go.